The South Korean stock market has been on a roller coaster in recent weeks, with investor sentiment swinging sharply despite record earnings from the country's two biggest chip makers, Samsung Electronics and SKhainicks. For more on this, we're joined today by Professor Oh Joon-seok, Dean at the College of Economic and Business at Sookmyung Women's University. Professor Oh, thanks for coming on today.
Thank you for having me.
So, Samsung Electronics extended its record run with second quarter operating profit topping analyst expectations. How significant is this?
Might be highly significant as the company performed more operating profit in a single quarter than it did in 2024 and 2025 combined together. This historic quarter illustrates its wider market impact on AI supercycle, completely solidifying its dominance in the global AI chip supply chain. Samsung took a giant technological lead by becoming the first in the industry to mass produce and make a shipment advanced HBM4 and HBM4E chip samples. A massive global investment in data center and autonomous agentic AI caused server chip demand to far outlive production capacity. It is expected Samsung will continue its record-breaking performance in the second half of this year. Samsung's second quarter result, though demonstrated robust demand in the market, but they also send a warning signal of structural vulnerability in its chip business and cyclical slowdown in consumer electronics area. In addition, the advent of edge computing decentralized data processing by bringing computation and storage closer to the source. Multi-billion-dollar data center expansions are bottlenecked by local power generation limitations. Geopolitical tension has been constant as well. The non-memory, for example, system LSI and foundry sectors suffered heavily from U.S. export restrictions on advanced AI chips to China. This caused unexpected inventory write-offs and then compliance cost that squeezes profit margin afterwards.
Right, and investors are now questioning how long Samsung's record high margins can be sustained. So how do you think this momentum will continue?
Worries has emerged like a working shadow in the dark. As you pointed correctly, investors are questioning how long this can last, given the cyclical nature of the chip industry, rising capital expenditure, and intensifying global competition. During the super cycle, margin remains strong in the near term, but one of volatility beyond 2027. Even though the 52.2% profit margin is technically near its cyclical ceiling, and Samsung's peak momentum will highly likely continue. Through the second half of 2026, and into 2027, Samsung management, they themselves explicitly confirm that global memory shortage will not only persist but become even severer heading into 2027. It is true, this cycle is fundamentally lengthened by multi-billion-dollar AI infrastructure deployment. However, physical and financial limits will inevitably bring it to a close afterward. A wider consolidation or slight tapering of this extreme margin is inevitable as the market stabilizes. A catastrophic collapse would be highly unlikely even in the future. At the moment, despite investor anxiety, major tech infrastructure spenders like Meta and Alphabet continue to scale up their AI capital expenditure. In this way, the structural AI-driven semiconductor supercycle will experience cyclical pause between late 2027 and mid-2028.
Right, and SKhainicks also reported a surge in second quarter profit. What's your take on the results and how is the market reacting?
SKhainicks posted an operating profit over $41.6 billion, representing a massive 557% explosion year on year. SKhainicks delivered an extraordinary record-breaking second quarter performance, yet the market reaction has been highly volatile. The unexpected regulatory heart attack and the subsequent aggressive market fluctuations showcase the dynamic at play. As for the market reaction, total revenue surged 257% year on year. However, Even this big figure missed the high-end customers' expectation of the market over 280%. And the minor shortfall stems from minor logistical delay in HBM4 shipment, pushing recognized revenue into the second half of this year. Let's take a moment for a comparison. While Samsung remains a massively diversified conglomerate managing a mobile device ecosystem alongside its chip businesses, SKhainic's is acting as a streamlined pure play integrated only on AI infrastructure. Thus, market counts in its 76% of profit margin outpaced Samsung's consolidated corporate matrix, keeping SKhainix firmly entrenched alongside NVIDIA, a prime beneficiary of the AI memory market. Either a focused strategy versus diversification strategy, nobody knows which will the market winner eventually. At the moment, SKhainix has finalized long-term agreement with approximately 10 key global hyperscale customers. This structural shift contribute volume stability of SKhainix and helps smooth out the volatility semiconductor cycle afterward.
Right, and the Korean government has introduced additional curbs on single stock leveraged ETFs following sharp swings in the local stock market. Are these measures proving effective?
Single stock leveraged ETFs are highly specialized and very volatile financial instrument, which is fit for the short-term tactical trader, but might be very dangerous delicate for long-term investors. Holding this fund for a week or a month almost guarantees underperformance relative to the target leverage. Through the introduction, it could help the market increase the trade volume and the number of diverse participants, not only the real traders, but also speculators or intraday traders. They could participate in the trade. Unlike index-based ETF, single stock can drop more than 20% in a day on a bad news, causing catastrophic and irreversible losses in the ETF. This is why I did not agree on the introduction of single stock leveraged ETF, and this is why Korean government hurriedly curbed on single stock leveraged ETF, such as raising cash deposit to 30 million won and capping holdings at 20% of an individual portfolio, which will be valued as temporary measures. Capital market reflected this change that it have sharply slashed trade volume, though there are debates their long-term effectiveness in addressing broader market stability. Raising the mandatory minimum cash deposit to 30 million won successfully discourages small-scale retail participation and speculative strategies. The 20% individual holding limit effectively covered the extreme concentration of retail assets tied to volatility tech giants such as Samsung Electronics and SKhainic's. Overall measures were effective temporarily again. Daily turnover and speculative activity in single stock leverage product plummeted by roughly 75% immediately following the enforcement of this kind of strict new requirement. What is to be remembered now is that sharp market swings are driven by macroeconomics and political headwind, the technical adjustment to market dynamics, and by short covering measures like single stock ETF structures.
I see. All right, Professor Oh, I'm afraid that's all the time we have for today. Thank you so much for coming on this morning. We appreciate it.
Pleasure is mine. Thank you.